Good evening. This is the speculator at Take Your Profits, and I'm going into another series of post-trade operations, and I'll be going over the post-trade review tonight of trade number 93, which was a short position I think early last week in the US dollar Canadian dollar market, in which I began a short position. Let's go ahead and take a look at it. Went ahead and began a short position after profiting from 500 pip long position early in the week, or early the week before that anyways. But looking at the characteristics of this trade, we'll be able to see exactly what I was looking at. And this is the Gartley pattern I was trading. We had an AB leg retraced to the just shy of the 50% retracement of the XA leg. The BC leg of this AB move retraced just shy of the 50% retracement of that AB move, and then the overall AB CD harmonic pattern completed exactly at the 886 retracement of the XA leg. I took the short entry on about a 3-bar reversal, at the 3-bar reversal, to confirm the market's intention to move in the downward direction. Set my profit targets, protective stops, and I shorted the market with half a position. Going into the Pro Trader dashboard, which I don't have up right this second, but this was trade number 93. The trade, to answer the first question, the trade really didn't go as planned because it was a tie. It wasn't a win or a loss. But looking at the characteristics of the trade, it did have a 1.05 risk profile. The money management rules mathematically defined half a position size to enter this market short. Based on the risk management analysis I conducted, which gave it a CTS score of 9. This trade was actually executed last Wednesday, September 28th, or the Wednesday before that, I'm not sure. It was a short position it lasted one day, short position in the US dollar CAD market, decided on the 30-minute chart. It was calculated as a win because it was a small win for, it was something like, it was probably something ridiculously small. Let me see, 1.03246, 03244. It went off by, on the 5th decimal place, it was off by 2 pips, so it was actually a complete tie because the spreadsheet couldn't even score. I mean, it was so small that the pips were like 0.00002. It was in the 5th decimal place is how small the gain was. So it was a complete tie. It was a total win of 20 cents, total gross profit and loss. So no win here. The trade did score technical points for having a stochastic MACD crossover. It was trading at a major level of structure. Did score points for ratio confirmation, being that Fibonacci and extension and a Fibonacci retracement lined up where price completed its movement. It did score points for completing an ABCD harmonic pattern with a 382 retracement. And it did score 3 points for completing a Gartley. See, that was actually an 886 is where that completed. So let's Let's change that. Completed at the 886 retracement, and if we see the risk profile, the profile scores of this particular strategy has a 47% chance of winning with about a 2-to-1 risk win to loss ratio, and the total earnings for the year on this particular strategy is about $1,200. So again, you know what? It wasn't a win, so this trade did not turn out as expected. Is the only answer, the only way we could answer that first question in the post-trade review. And if you can see here, the AB leg retraced to 50%, and then the equidistant CD leg of that move completed at the 886 retracement of XA. And then the extension from AB completed. Actually, we got confirmation at the 786, so which is probably why I scored the Gartley pattern 786 completion on the Pro Trader dashboard. My entry was at the 786. Protective stops were above point X, and my profit target was just shy of the 618. Going into the picture of the post-trade review to see the final outcome of the trade, we can see what happened was the market did go actually in fact in favor of the trade, retrace somewhat, going back to break even, and then turning down sharply, hitting the 382, which actually according to my rules of engagement allows me to bring my stops to break even. Hit the 382 retracement of that move, and retraced to or rallied back up to go ahead and take out my protective stops at a little bit better than break even, therefore taking me out of this trade with no gains. So in this case, the trade did not go as planned because it did not hit any profit targets. This is a particular trade in which the add point and the ROE add point where I dictate that my profit target should be just shy of the 382. This would have been a win under those circumstances if I would have used the more aggressive profit taking strategy. However, I did not use it, but the fact that I trailed my stops to break even on the fact that price did hit the 382 ensured that this trade would not be going down for the loss, and it did protect my capital. So I'm not going to sit here and say that it was wrong of me to have my profit targets a little bit wider out. This trade with the protective stops where they were at only showed a 1-to-1 risk profile, so being that the risk profile was a 1-to-1 with the profit targets where they're at, means that the profit targets were actually located correctly according to my rules of engagement. They just weren't necessarily shy of the 382, which would have made my risk profile not according to my liking. So you know, the fact that I had taken 500 pips out of this market previously, going in the opposite direction, this trade was an attempt to take advantage of a possible market reversal, considering that the market did put in this pretty good looking Gartley 222 pattern anyways. And just the market chose not to respect the pattern completion, and it chose to go in the exact opposite way towards the protective stops. I got lucky in that the market moved enough to allow me to move my stops to break even, so that way I wouldn't have to incur the loss on this trade. It at least made up for the cost of commission. So, you know, no harm, no foul, no loss taken. You know, and this trade was just that. It was a good trade. You know, this is a probable pattern and a probable opportunity to make money, and it's my job to make sure that I participate in all of these opportunities to make money. And you know, I understand that most of the time these opportunities are not going to pan out, and they're not going to allow me to make money. So I just have to keep pushing ahead. I have to stay persistent. I have to stay consistent. I have to stay disciplined with the execution of my strategy. and continue to move along. And I wouldn't, I'm not going to sit here and say that, there was any good way to improve upon this trade, because even if you look at this trade, we can see this is a 5-wave Elliott wave pattern. Here's wave 1, 2, wave 3, wave 4, wave 5, and then the A, B, C corrective wave, the three-part wave, and we went ahead and took the entry short based on that wave analysis, and the market just had no follow through. So I actually did a good job in that I trailed my stops to break even once the market did show a little bit of movement in my direction. So that was definitely a positive action on my part, in that it ensured that this was a risk-free trade, and that's what I strive to achieve in every trade, is a risk-free trading opportunity, so that way I can take advantage as much profits as the market makes available to me. So again, here's another example where I just got to stay consistent. I got to stay on the horse, and I got to stay driving forward towards my my eventual goals and making consistent profits in these markets. And I got to keep playing these same probabilities. So this is the speculator signing out. Thanks for watching. This was the post-trade review for trade number 93 that did not go as planned. And really the only way that I can keep up the good work is by continuing on and trading my strategy and my rules of engagement consistently, as I did with this very trade. I just got to keep on it, keep executing and doing what I'm doing. So again, this is a speculator signing out. Thanks for listening. Don't forget, take your profits.